In the last class, we have discussed about cash flow statement until fourth question. Now we're going to start with the fifth problem. Prepare cash flow statement for the MNT Limited for the year ended 31st March 2011 with the help of the following information. But they didn't mention whether we need to prepare direct method or indirect method. But as we discussed in the previous lecture, if they gave a net profit or any information related to the net profit, then use the indirect method, right? So here in this question, there is no net profit, right? So you cannot find out net profit very easily. So it's better to you can deal with this problem with indirect method. So let's solve this problem by using indirect method, right? So cash flow statement for the year ended 31st March 2011. Cash flows from operating activities. First we're going to do operating activities. In this one, generally we start with the cash from sales, right? So they mentioned all the goods are cash only, sold goods for cash only. They didn't give any information regarding the sales, but they gave this piece of information to find out the sales. Gross profit ratio was 30% for the year, and the gross profit amounted to 3,82,500, right? Okay, so from this information we can find out the sales. Generally, sales into gross profit ratio is equal to gross profit, right? This is general formula. They gave the gross profit and then gross percentage ratio. All we did is GP divided by GP percentage. Then we got the sales, which is 12,75,000. Okay, so we're gonna start our solution with that. 12,75,000 cash receipts from sales, and then what else? Opening inventory was less than the closing inventory, which is not required because that piece of information is required in the indirect method, right? So but we are doing in direct method, so obviously we don't require that. So next one is wages. This is not required, so we don't need that. And then this is done, this is done. Wages paid during the year 4,92,500. Okay, so wages paid, cash outflow, which comes under operating activities only, right? Because this is related to primary business activities. So wages paid during the year 4,92,500, and we put in brackets because it's a negative figure. And office and selling expenses, again cash, operating cash outflow. And then right, so done. Dividend paid during the year for 30,000, including dividend distribution tax. So this is financing activity, right? So dividend paid during the year, cash outflow 30,000. Bank loan repaid during the year. This is also financing activity. Anything related to capital, financing activity, right? And then trade payables exceeds. This is not required. This is the information we're going to use in indirect method, so that is not required. And then amount paid trade payables during the year 4,60,000. This is required. We paid the money to the trade payables. That means when we pay the money to the trade payables is like creditors. When we pay the money to the creditors, when we purchase goods from them, right? So that means this piece of information contains about the purchases. So 4,60,000 amount paid to trade payables is 4,60,000. This is operating cash outflow. Next, tax paid, and then investments, depreciation, plant and machinery purchased. So far in all this there is no operating activity. So let's close the operating activities first. Okay, so now if you add or subtract all these things, you will get the cash flow from operating activities, which is 2,47,500. And then from that, tax paid during the year is 65,000, right? So 65,000 is the, if you deduct the income tax, then we will get the net cash flows from operating activities is 1,82,500. Now investment of 7 lakh sold during the year at a profit of 20,000. That means we have sold it for 7,20,000. 7 lakh is the book value plus 20,000 is the profit. So total for 7,20,000 cash we have received. So how much we have received? Only that figure we need to enter here. So 7,20,000 we have received, right? And then next one, depreciation on fixed assets amount. So this is the non-cash items which does not come in the direct method. Plant and machinery purchased on 15th November 2010 for 2,50,000. This anything related to the assets belong to the investing activity, right? So 2,50,000 cash outflow. Next one, cash and cash equivalents at the end and at the beginning, and end. So that's it. So let's close the investing activities. So 7,20,000 minus 2,50,000, you will get the 4,70,000 is the positive figure. And then financing activities. Financing activity is 30,000 and 2,15,000, and then 2 lakh. If you do that, you'll get the minus figure of 2,45,000, right? So minus figure of 2,45,000, and then if you 1,82,500 positive figure, and then 4,70,000 is positive figure, and then minus 2,45,000. If you do this, you will get the, hold on, yeah, you will get the net increase in cash, which is 4,07,500, and then for that add the opening 4,07,500 plus 2 lakhs, add the opening, this is the opening, right? Then you will get the automatically closing, which is 6,07,500. So if you are getting the correct figure of closing, then whatever we did so far, right? So this is the figure we got from the question, and they gave the opening. When we add the net increase and decrease in cash plus opening, we got the closing, which is exactly given in the question. So that means so far whatever we did is correct. Okay, let's start the problem number 6. So this is the problem given in the question. The following data were provided by the accounting records of Ryan Limited at the year ended 31st March 2011. Sales, cost of goods sold, and then gross margin is like a gross profit minus operating expenses. This includes depreciation. This includes depreciation of 37,000. Total operating expenses are 1,47,000. After that, they deducted all the expenses, and then they got the profit. They got the profit after deducting the tax. Sorry, hold on. Yeah, so this is the profit after deducting the tax. So they gave the net profit in this question. So we can solve this question by using indirect method, and we have to start always, which we discussed in the second part, we have to start indirect method always net profit before taxation. So net profit before taxation is 23,000. So let's start our solution with that. So net profit before taxation, which is 23,000. Then we need to add non-cash or non-operating expenses. So we need to find out what are the non-cash and non-operating expenses, right? Just a minute. Hold on. Okay. So here non-cash and non-operating expenses, which is given in the question, is first will come from the beginning. Depreciation, again you need to see the second part, then only you can understand this. So the pro forma has been explained clearly in the second part. Alright, now depreciation is a non-cash item, right? So depreciation is a non-cash item. In the P&L account you might have debited it, right? That means you might have deducted it, right? But because of this item there is no cash is going out, so that's why we need to add back now. So we need to add back the depreciation, which is how much? 37,000. We will add under the non-cash non-operating expenses. So in P&L account, even though there is no cash outflow because of this item, you have deducted it, now we will add back it. Next, interest expenses paid. So depreciation is non-cash and interest expenses paid is non-operating. This is not related to the operations, but still you have deducted in the P&L account by writing interest expenses, right? So that's why now we will add it back. Interest expenses paid is 23,000. Loss on sale of plant, again this is also non-operating item. So here loss on sale of plant. So we are taking only the expenses first. So first interest expenses paid and then loss on sale of plant, right? And then that's it. Let's come to the incomes now. Interest income received and then gain on sale of investments minus non-cash or non-operating income. Gain on sale of investment is non-operating. So if you do all those things, you will get the operating profit before working capital changes, which is 68,000. Now we need to give an effect for changes in working capital, right? Changes in working capital. Like we discussed in the second part, we need to form one table. So current asset, current liability, increase, decrease, increase, decrease. Current assets may increase, current assets may decrease, and same for current liabilities. So if the current assets decrease, let's just say debtors are decreasing. Debtors is a current asset, right? So debtors are decreasing. That means we are getting more and more cash. We sold goods on credit basis, now they are paying back. So again this was clearly discussed in the second part. Okay, so if it is increase, just opposite to that. And then creditors are decreasing. That means we bought the goods on credit basis and we promised to pay them later. Now we are paying, so that's why the creditors are decreasing. That means we are paying means that is outflow, right? And then this is increasing means that is just opposite to that, inflow. Alright, so let's use this table and solve this problem. Now if you don't understand this, I suggest you to watch the second part, then you will understand this. Anyway, so here we have did current assets. We need to give an effect for working capital. That means nothing but current assets minus current liabilities. So let's deal with the current assets first. Investments. So we have to read from here, from 1,10,000 to 1,44,000, right? So inventory has been increased from 1,10,000 to 1,44,000. Inventory is a current asset, right? So that means there is a increase in current asset, which is outflow, right? So it's outflow, so what's that? We put in brackets. Next one is accounts receivable. So here one accounts receivable was 55,000. Now it has been decreased to 47,000. So that means decrease in current assets. So it's an inflow. How much decrease? 55,000 minus 47,000 is equal to 8,000. And then cash we don't consider here, even though it is a current assets, because we will add that in the last, so we don't consider here. Prepaid expenses is a current asset. So this current asset, it was 5,000 previously, now it was 1,000 rupees only. That means it has been decreased. Decrease in current assets relates to result inflow. How much? 4,000, right? So let's come to the liabilities then. Liabilities, again we need to look up only the current liabilities. Current liabilities, accounts payable was 43,000. Now it is 50,000. That means there is an increase in accounts payable. That means increase in current liabilities. So that means that is a inflow. So inflow. And then it was 9,000. Now it's 12,000. Again increase in current liabilities. Inflow. 3,000 inflow. So from 68,000 plus 34,000, sorry, 68,000 minus 34,000, you will get 34,000. From 34,000, if you add all these things, you will get the 56,000. That means that is a cash generated from the operations. Then finally you need to deduct the income tax, right? So income tax, so here in the question they gave that income tax they paid during the year was 7,000. Now you need to check the whole question. Is there any provision for tax? Yeah, so here they mentioned that there is an income tax payable was 3,000 plus 5,000. We need to take the amount, take the figure only whatever the paid during the year. So they are saying that income tax expenses during the year was 7,000, and then opening income tax payable was 5,000 minus closing was 3,000. That means 7 plus 5 12, 12 minus 3 9. 9,000 is the amount paid during the year, right? So income taxes paid during the year is 9,000. So 56,000, which is this, minus 9,000, you will get the net cash generated from operating activities. So let me put this here, right? So net cash generated from operating activities is 47,000. Okay, let's do the cash flow statement from the operating activity, investing activities. So we just finished operating activities, which we got 47,000, and let's finish the from investing activities also. Just hold on, it's a little bit slow. Okay, so here from the beginning, this interest expenses paid is a financing activity, so we need to write under financing activities also. Interest income received is a investing activity, we need to write in the investing activities also. So let's start writing that. So yeah, interest income received is 6,000, so we wrote in the investing activities. Now just a minute. Yeah, they mentioned purchased investments here. Purchased investments, that means which activity? Obviously investing activity, so cash is going out, so put in the brackets. Sold investment 1,02,000, and then this investment cost 90,000. That means 1,02,000 was the book value and we sold it for 90,000. We sold 12,000 loss, which we already consider here. It will make sense now, right? Loss on sale of investment. Sorry, gain on sale of investment. Just hold on. Sorry. So we sold it for investment cost was 90,000 and we sold it for 1,02,000. So it's 12,000 profit. So gain on sale of investments we have recorded here 12,000 profit, right? So again the same thing, you don't need to record. So here you can record because this is the actual amount we have received from them. So total 1,02,000 you can record here. And then purchase the plant and asset for 1,20,000. So 1,20,000 cash gone out. And then sold the plant asset that cost 10,000 with accumulated depreciation of 2,000 for 5,000. So that means the asset value is 10,000 and then accumulated depreciation is 2,000. So total the cost of the asset is 8,000, right? And we sold it for 5,000. That means we got a loss of 3,000. Loss on sale of plant. So this also we have already taken care here. Loss on sale of plant. So which is this already given in the question. See here, loss on sale of investment. So gain on sale of investment is 12,000, and then loss on sale of plant is 3,000. So now if you correlate with the adjustments, you are getting the same figures, right? Yeah. So that's it. We are done with the investing activity. So if you do additions and subtractions for that, you will get the 85,000 net cash generated from the investing activities, 85,000. Let's do the financing activities. Yeah, and before that, if you remember, we have deducted the depreciation in the operating activities, which is 37,000, right? So even you can correlate with the adjustments now. So here the accumulated depreciation is 2,000, right here. Okay, remember that 2,000 depreciation, and here they mentioned accumulated depreciation was closing is 1,03,000 and then opening is 68,000, right? So 1,03,000 minus 68,000 is equal to 35,000 plus 2,000, which is the depreciation again, whatever the machine we sold, right? So total depreciation is 37,000, which is given in the question. We even consider that 37,000. So everything is tallying, whatever the adjustments they given, and in the question also, right? Okay, let's get back to our financing activities. So we're done with the operating activities and then financing activities as well. So let's start with the financing activities. All right. So here issued 1 lakh of bonds at a face value in exchange for the plant asset on 31st March 2011. Due to this transaction, we're not getting any cash or we're not paying any cash. So if there is no cash inflow or outflow, it does not come under the cash flow statement. So we don't need to worry about this. So leave that. Now, sixth point, repaid 50,000 of bonds at a face value at a maturity, right? So that means we have paid 50,000, right? So it's a financing activity and it's a cash outflow. And then issued 15,000 of shares at 10 rupees each. So 15,000 into 10, 1,50,000. This is also financing activity. Now, eighth point, paid a cash dividends 8,000. So that is also cash outflow which comes under the financing activities. Alright. So let's see. Let's correlate with the let's correlate here. Bonds. First bonds. 2,45,000 was the opening and 2,95,000 was the closing. So 2,95,000 minus 2,45,000. So which is 50,000. 50,000 has been increased. That means 50,000 sorry for the delay. System has been a little bit slow. Yeah, so they mentioned that bonds, the difference is 50,000, right? So bonds difference is 50,000 and then share capital difference is 1,50,000, which you can correlate with the adjustments, both are same. So anyway, let's coming back to the adjustments. So first repaid 50,000 bonds at the face value at maturity, right? So 50,000 is cash is going out, and then issued 1 lakh bonds of face value in exchange of the plant and asset. So which is there is no cash inflow or outflow, so we don't consider that. So now we can see that if you observe here, we have issued 1 lakh bond for plant and machinery, right? And then we have repaid 50,000 bonds. In the opening, how many bonds we have? 2,45,000 plus 1 lakh, that means 3,45,000, minus we have repaid 50,000. So if you do that, you should get 2,95,000, right? So 3 lakh, this is not working. Yeah, you will get the 2,95,000. 3,45,000 minus 50,000, you will get the 2,95,000, right? And the same goes for the shares. They mentioned that they issued 15,000 shares into at the price of 10 rupees. So that means 1,50,000. So previously your share capital was 3,15,000. Now it has been increased to 4,65,000. So that is also tallied, right? Okay. Now let's go to the dividends. Paid cash dividends. Again financing activity. So 8,000. So deduct that. So this is tallied, and then interest paid previously done. So if you consider net cash from the financing activities will be 69,000, right? So operating activities is 47,000, investing activities is 85,000, and then net cash flows from the financing activities is 69,000. So 47,000 plus 69,000 minus 85,000. If you do that, you will get the net increase in cash and cash equivalents is 31,000, and then opening cash and cash equivalents. So remember this is 31,000, right? So 31,000 and then cash here is the opening is 15,000. So 31 plus 15,000, if you do, you'll get the 46, right? Yeah. So if you have any doubts, comment below. See you in the next class.